This conference will now be recorded.
Good evening, ladies and gentlemen. Clueless Trading Frank again, doing our weekly weekend strategic webinar, which are extremely critical because most of them have been directly on the point on what will happen the following week and going forward. It is 9:07 p.m. on October 6, 2019. Welcome. This strategic webinar will be uploaded to the Google YouTube channel for viewing by other members, free trial subscribers, and anyone out there with the internet connection, anyone who has any interest on understanding what US financial markets do and how to make some money out of it. It's really as simple as that. Full disclosure, this is purely for financial education, not for any solicitation or advice. We have two great loyal members. We have Mike H from the Midwest, and we have our good friend here, Dominic, just north of us, um, here on the East Coast. And whoever comes in after this, welcome. So let's kick off. Try to keep this, as I always attempt to, brief. So a couple of broad points here. Number one is everything that we talked about on the reflex rally happened exactly. There's no question about it. And I'm sure many of you took full advantage of it based on the technical charts. And one of the things that amazes me every day, every week, and I am constantly learning on the job, just like all of you are, that these technical levels are just unbelievably accurate, and the structures that are drawn on the charts are just unbelievably correct. So you have to trade in between them, just the way it is, whether it's a Google, whether it's a Netflix, whether it's Apple, whether it's the SPY. And the biotechs are a different story because those follow their own story. Like, each of them have their own issues, good and bad. So it's a different, I'm talking about the general things that move with the market. So bottom line is that everything that we talked about, from the unbelievable reversal, not unbelievable, it's happened before, huge candlestick reversal, and we're going to go through it. And everything's on Twitter, on the Twitter feed. So any of you who have taken the time over a nice cold beer to look at it, if you hadn't had a chance to do it real time during the day, know very well. It's been absolutely precise. No question about it. A small account can become a larger account despite intermittent losses if you acted on those tactical lows. Remember, as I said in previous webinars, including the last one, that the hardest thing for a human trader to do is to be aggressive on the long end and to buy the calls. We're talking about options here, option calls during those furious reversals where the markets are down 200, 300, 400 points, and then all of a sudden they turn. And then they're up 200 points. And the next day they're up 400 points. We fell 1,200 points on the Dow in 48 hours. Talked about it last week. I mean, on the last webinar. And then we turned around and took back almost all of it within 48 hours. So you tell me. So if you're not learning on your own from that stuff, forget my technical expertise and all that stuff. But you're not understanding how human emotions work. Like one day the world is falling apart, the next day everything is good. The jobs report was actually a Goldilocks scenario where it was good enough, not too high, all that good stuff. That the ISM services number was pretty okay. The ISM manufacturing that caused that big drop wasn't okay. Then if you're just not kind of learning on the job, then I have nothing to say. I'm not in the business of shoving technical expertise and options education somebody down's throat. They got to learn on their own. So that's it. All right. And the charts will tell you where we're going to bounce from, where you need to take out the full or partial profits that I talked about repeatedly on Friday. If you all remember. Or you can just make excuses and just sit there and say, oh, well, this market is nuts. The market is never nuts. The market is run by black box machines, which are not nuts. Yes, volatility. Does it feel good? No. Trading's not supposed to make you feel good. It's supposed to make you money. If you want into the feel good camp, go to a nice little play on Broadway in New York City or in your hometown or have a nice cold beer and just get fat. I don't know. That's feel good. Feel good won't make you money in trading the markets or investing in the stock markets. And our US financial stock markets are the best in the world. The best in the world. Not always the highest performing ones, but the best in the world. Okay. So first thing I'm going to do is show you some economic things which are very important that's coming up, and I'm going to highlight the ones that are important. We start off Monday, the 7th, tomorrow in a few hours. Let me change the pen color. I like blue. I hope you guys like blue. And what's the Wednesday? Neil Kashkari, very smart guy. In fact, very pro rate cut. Very much in the Trump administration camp of rate cuts, rate cuts, rate cuts. And Neil Kashkari speaks, and he's a dove. What does a dove mean? A dove means somebody who's soft on the rate hike scenario. He wants rate cuts, interest rate cuts, Fed funds rate cuts, discount rate cuts, everything that the Federal Reserve has full control on. So that's good. He's not the most powerful Fed member, but he is very smart. That's an ex-Goldman Sachs guy, was very instrumental during the financial crisis in 2008, 2009 to do the right thing to turn the US economy around. And boy, did it turn around. Now, this is the big deal, and that's why it's in red. I didn't change it to red, but it is. Jerome Powell, the head, the big kahuna of the Federal Reserve Bank, chairman, speaks at 1 p.m. You don't think the market's going to have volatility by at around 1 p.m. on Monday? Then you're living in a parallel universe you want to get the heck out of. So this is big. You didn't even know that. Thank God for these webinars. Thanks to all of you guys for focusing me on what's going to happen. So I'm trying to draw a star here miserably. But anyway, Jerome Powell speaks at 1 p.m. Monday. Big time. What happens on Tuesday? So we move on to the next number. We have the PPI. Very important, 8:30 a.m. That's producer price inflation number. CPI is for consumer price inflation. PPI is for producer price inflation. What companies pay and how much more they're paying for their raw materials to make the products. Very important. Oh my God, Jerome Powell speaks again at 1:50 p.m. Holy crap. This is getting wild. Jerome Powell is going to cut rates pretty significantly. He doesn't want to cut rates to the point where there are no more bullets left and he can't cut rates anymore. I mean, I know President Trump has yelled and screamed at him like, he's a loser, blah, 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 which I think is so pathetic. You know that. And any of you with any sane mind would think the same thing. You don't piss on a economic patriot like Jerome Powell. You just don't do that. But hey, what am I going to say? Donald is a lot like me. We like to be kind of like nuts. So I understand him very well. And I've dealt with his organization many years ago when he was raising money for the Atlantic City casinos that all went bankrupt. So anyway, so Jerome Powell speaks again at 1:50 p.m. Very important. Let's move on to Wednesday. We have the JOLTS number. That's the jobs number. One of the other things, jobs opening numbers. That's why it's called JOLTS, JOLTS. So that's important. By the way, there's a lot of jobs that are open, but they ain't cheap jobs. Like, I'm going to smoke a couple of big blunts and have CBD for breakfast, marijuana and all this stuff, and I'm going to go put boxes on trucks. No, not that type of job. I'm talking about jobs that are paying high 5 figures and low 6 figures to start jobs with brains. Like I said, my slogan is make America smart again. You don't have to worry about anything else. But no, we don't want to make America smart again, right? We want to make America great again by doing nothing. Complete bogus crap. That's serious. And if you think about it, you know I'm right, because nobody could question my allegiance to the United States of America. So, the JOLTS number, lots of jobs opening. Let's see. But they can't fill it. Wake up. Jerome Powell speaks again at 11 a.m. Oh, Lord. So we got Jerome Powell here, Jerome Powell there. I'm going to draw this chart. And then Esther George, another Fed governor, speaks, lady. And then we have something very, very important. So these are the ones which are the most important part. Jerome Powell speaking his thoughts on the U.S. economy and what, he never did, and all the stuff. And the market's going to be listening very carefully. So these are volatility points. Markets are going to go for it. But my opinion is, net, he knows things are slowing down. Things are slowing down. Guys, China is not like the Chinese, our relationship with China on the business front. I don't think most Americans even realize that China holds the largest amount of U.S. debt. All these years that we kept on selling U.S. Treasury bonds and our deficit and our U.S. debt is in the trillions and trillions of dollars. Who do you think buys it? The Martians? China has been one of the biggest buyers of U.S. debt. That's the economic pact that we have with them. Buy our debt, finance our maniacal habit of spending. I don't think most people realize that. I think most of you realize that. Let's move on. So FOMC minutes, that's the notes of the last FOMC, Federal Open Market Committee meeting. So that's important, very important. So we got 4 very important things. Do I have 4 stars? 1, 2, 3, 4. Yes, within the first 3 days of the week. This is going to be one heck of a week. Thursday, October 10th. What happens on Thursday, October 10th on the U.S.-China trade front? Any of you'd like to answer? Dominic, Mike?
They're coming to talk.
Thank you. You're the best, man. You're hired. So you're hired. That's it. Yeah. Yes, they're coming to talk. And I think in between the garbage rumors that the media likes to spread, like, the Chinese, Li Huao, I think I'm pronouncing his name right, the trade negotiator, who actually President Donald Trump likes a lot. Smart guy. Oh, he just threw up on the table, and he decided that he took a long bathroom break, didn't come back to the meeting. You're going to hear a lot of these garbage rumors. It's called noise. Just the way they try to spread that garbage rumor on Netflix that, Amazon, Disney is removing all the Netflix ads from Disney, blah, blah, blah. Stock fell like $6. Next thing you know, it goes up $9 from the bottom. The media, the establishment, everyone's establishment, and that includes Fox, Financial Network, and Bloomberg and stuff. They're all going to be trying to piss on it. I think it's still going to come out okay. It's my opinion. Thursday, August 10th, China. I'm just going to put China. Trade delegations arrives in town for 2-day talks, right? October 10th, October 11th, which is not in the economic calendar, which any of you can access, econoday.com, because it is not an economic thing. It is a trade-related thing, so it's not an official economic release. But on the same day, we have CPI, which is the same thing as PPI right here, which is on Tuesday, and that's consumer price inflation. What is it? It's basically the Labor Department, the U.S. Commerce Department, Labor Department looks at a basket of a set amount of goods and see whether the prices have gone up or not. So you don't want it to shoot up too much. That means the Fed will be like, whoa, inflation's picking up too much. So we have to slow down on our rate cuts. So I think it's going to be okay. Then we have jobless claims. It's important, not that important. Then we have Neil Kashkari speaking again, which is good because he wants a lot of rate cuts, and that's a thing on Thursday. And then we have Loretta Meister. I don't know if she's a dove or a hawk. What does a hawk mean? A hawk is somebody who wants to raise rates. Forget about cutting rates, just raise rates. So I'm not quite sure where Loretta Meister stance, because each of them talking are voting members, right? So their vote counts on the actual thing. Ultimate decision always lies with Mr. Powell, the ultimate nerd. You want a nerd to run the Federal Reserve Bank, which is the most powerful bank in the universe. You don't want like politician running it, right? I don't think so. My famous line, wake up and understand how the US system works. Neil Kashkari speaks again. Wow, he's popular. Eric Rosengrand, I believe he's a dove. That means he wants rate cuts. Kind of a mixed guy. He was on the other day. And Robert Kaplan speaks again. Not sure if it's a day. I can't remember. So lots of Fed speakers. So I'm going to put lots of Fed speakers. And Fed doesn't mean FBI, ladies and gentlemen. That's the Federal Reserve Bank of America. Lots of them this week. And you got the China trade delegation on Thursday and Friday. And we wish both parties the best. We do. We're not into we hate China kind of stupid stuff. No, I think we need to be smarter than that. They are an economic competitor, and we want both of them to somehow benefit, have a framework of a deal that benefits both major countries. Don't forget, our population is dwindling. We don't have kids anymore. Very few Americans have kids anymore. And what happens when populations dwindle? Oh, countries' economies get stronger? No, they eventually die. China's population is growing in big leaps. Demographics are very important. They are the consumers. They are the ones who buy. End of story. All right, let's move on. Done, done. Clean, clean. Now we get into charts. Any questions on what I talked about?
Not yet.
Okay, sounds good. I like that answer. All right, now, couple of things here. This is a Sunday 9 p.m. strategic webinar. You all understand that, so that's good. Next. This won't move? Wow, this won't move. Why won't it move? Okay, move. Second thing is, as traders, we constantly have to watch out for this guy or this girl. I don't know. Who is this guy? This guy and girl is what we call volatility. Features are doing pretty okay. All right. These are the algorithmic high frequency trading programs, black boxes. What are black boxes? Black boxes are basically nondescript looking boxes which have the fastest processors, artificial intelligence, and they run the markets. You think mom and pop sitting there in Idaho or New York or New Hampshire or Wisconsin are running the markets? No. There are these nondescript buildings which have nothing but hundreds of servers, like you see in the science fiction movies, that are moving stocks and the markets at lightning speed. It creates volatility. Those are the ninjas. I put this tweet out a long time ago in March of 2017. Trader alert, active traders not monitoring tactical charts tend to get ambushed by Algo HFT black box programs. Even the ones monitoring charts like me, like nobody's business on my 14 screens, get ambushed. But we don't panic. There's a difference. So what's my famous line? Wake up. Time to grow up. So watch these ninjas, these algorithmic high frequency. They just sneak up on you just like regular ninjas and they chop your trades off. And the next thing you know, the same thing turns around and goes up a zillion points. Your options are up 120 points, but you're not in the trade because you're not understanding or following the charts. The ninjas will always get you. Those ninjas are the algorithmic high frequency trading black boxes, what we call Algo HFT. End the story. Let's move on. Now we get into the charts. This is a pure mathematical chart. So first quick question. When you look at this chart, what does it look like? Like first glance, when you look at this ultimately precise structured charts with Fibonacci retracements, where I told people over and over again, we're at least going to go to the 50 fib, which is halfway up. 50 fib in simple English means if you drop from here to here, then at least you're going to bounce to get 50% of that back. So if you play your cards right, your account is going to be stable to nicely, big time higher. So when you look at this chart, first glance, what does it look like? It wants to go up or down? Mike?
I'd say up. I'd say up.
Okay. Mike, any opinions? Okay. No worries about that. When I look at it, like let's say I do nothing and it looks up. And it looks up for a simple reason. This is how markets work. They don't go up in a straight line. They go like this. That's why I have the tactical channel or the technical channel drawn. So if that's the case, this is where we are right now with futures down 14. And there's numerous amount of traders out there. Go to StockTwits, go to other platforms where they're talking about things and they're like, told you so, we're down 14 on the futures. Okay, exciting. Like it just always boggles my mind. But hey, it's a job. So they're all chatting like, oh, futures are down 14. Everything's going to be hell in a handbasket. There's a second whistleblower, supposedly, who's going to surface on this Trump-Ukraine talk. Even Tucker Carlson from Fox Network didn't like the fact that the president spoke to the Ukrainian president and talked about him doing what he needs and that he should look into the Biden thing, which I think also is very fishy. Biden and his son, he's another big shot, private equity guy. Even Tucker Carlson said, he shouldn't have done that, and then bragged about the fact that he did it. It's not right. So there's political issues going on. Then think about it just logically for a minute. You can do all this stuff. You can tell now the government, hey, check on this bozo. All right? But you don't want to, when it kind of sneaks out, you don't want to be like, yeah, I did that. What's the big deal? No. You say I didn't do it. Seriously. So forget all that stuff. Let's just look at this stuff here. So we will come down a little bit more. And as long as we stay within this channel, then we will climb. So follow these charts if you don't follow the charts, you are trading at your own peril. And if you're not trading, then you missed out a gazillion 1,000 point rally and you saw so many things up 100, 200, 300% plus. But you're like telling your little voice in your head, oh, it's okay. There'll be a next time. There's never a next time. You got to seize the moment. So this to me looks okay. Looks okay. So let's look at a longer term chart. Slightly longer than what we are looking at. This is your 1 hour. That was a 15-minute. This 1 hour chart, Dominic, just using the sounding board. What does this one look like? This is a 1 hour. This is more for swing traders who are not concerned with what's happening intraday. So first glance, what does it look like? This is where we are.
It looks healthy, but we have some resistance coming up.
Yes, and that's what I talked about significantly on Friday, if you remember, right?
Yep.
So, and that's fine. That means that then I reduce my position. You know that. I said that clearly. Take full or partial profits. Simple English. Don't get out of everything, but take full or partial profits. So the fact is that even if you pull back to any one of these technical ranges, retest this down trend line, blah, 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 you will have cash, which you do, Dom, to deploy at that time and take advantage of the next wave up. Because to me, the chart looks okay. Now, if this candle that's developing right now, this is where we closed on Friday. This is a major resistance. I talked about it hundreds of times, including multiple webinars, including the last one. This is a major resistance that we broke out of with a massive 400 to 500, 400 plus point rally, 300 to 400 point rally. And what date was that? Can you tell me the date when you look at the bottom?
September
4th. And it happened after hours at 9 p.m. See, it says 2100 hours military
Yep.
time, right? Exactly. And before that, this is what the market closed at, right there. And then there was this massive move higher. So it broke out with the fury. And just so you all can understand, there is the real picture. Okay. So when you look at this picture here, and you have to, one thing I want to say to everybody is most traders are never technically disciplined. I look at the market as a matrix, as geometric patterns. And the more you kind of use this tool and the way I look at it, I'm not asking you to like marry the whole clueless trading method and say, oh man, that's the only thing that works. No, so many other things work too. But what I'm saying is when you look at the market in the form of the structural patterns in the mathematical way, in my opinion, in this day and age, you will do better. That's all. So you had this massive green line here, which is the breakout line. And that's exactly where we hit. It wasn't like we ended here. We hit exactly that. And that's what I was talking about repeatedly of this strategic bottom and the reversal, which was unbelievable on the jobs number on the 3rd. Actually, day before the jobs number. 4th was the jobs. No, yeah, 4th was the jobs number, which is Friday. You see the size of this tail, ladies and gentlemen? Let me just zoom in. This is a Chinese firecracker. Why not? Why Chinese? Like it could be any firecracker, but Chinese. Pennsylvania has the best firecrackers in the world. Jersey doesn't have any firecrackers. They suck. I love firecrackers, fireworks, but they won't allow us in Jersey. So I got to cross into Pennsylvania. You know, I still got to look up, and I got the Morning Glory sparklers. Isn't that great? I love that. Okay? You know, seriously. It's right on top of my work area. Morning Glory sparklers. I got a light one, but then they'll probably arrest me for, you know, in Jersey for doing that. So anyway, look at this tail. Just like one of those rockets you put in the bottom and they go out, right? That's big. That's billions of dollars. Guys, see, I don't want to get into the hardcore, like, you know, sound like an MIT professor teaching you hardcore technical analysis. I do all that stuff on advanced coaching sessions that people pay a little bit of money and they learn a lot. I'm trying to make this simple on these free on my weekend webinars. Look at this. Once this happened at 10 a.m. on the 3rd of October, write it down somewhere. Remember it. It was a pivotal moment. And then the markets went up more than 1,000 points over the next 48 hours. Hallelujah. Many of you maybe just sat there. Okay, what can I do? So bottom line is, this is what we are right now. Big resistance here. This is where we closed at 4 p.m. on Friday. This is where we dropped to when the global futures started trading at 6. We went from roughly around 29.52 down to 29.29. Like, oh my God, the world is falling apart. And that's only for all those people, including maybe some of our people, I don't know, who don't watch charts. They're looking at futures down 14, like, oh my God, Armageddon again. No! This is where we drop big, fat, bullish candle. I mean, some hedge funds shorted the market right at the close, and they made themselves a sweet profit. And then look at the size of that beautiful bullish candle. Get in love with candles, not the ones you buy from TJ Maxx and Bed Bath & Beyond. Get in love with, literally, because that's going to make you a lot of money with candlestick patterns. A big bullish green candle that appeared after the drop at 6 p.m. today. Forget the numbers. Those are for idiots. I'll say it. Just non-chart traders are bona fide idiots. Sorry. So bottom line is, this is beautiful. And now this is where we are. Now, if this turns into blood red and goes like this, let me get the red, and it becomes like this, then things are not going well. That means we'll most probably retest 28.92, 2900 again. We shall see. I doubt it, but we shall see. That means futures will drop more than 30 handles. And the long, limited long position that we have going to next week, boom! We have forced to dollar cost average, and in my opinion, we're still going to make money. But we don't want that. We don't want that. We don't want 30 handles down, 30 points down on S&P futures. Do we, Dominic?
No.
Right. But I'm just saying it can happen. Could be some terrible news in Chinese delegation canceling the trip. How about that? By the time it's like 5 in the morning. It can happen. They at least issue press releases. Donald just tweets, which is actually faster. So what if they issue a thing saying, after serious consideration, we're not going to be making it to Washington, D.C. We'll see you guys next month. Markets will drop 400 to 500 points at the open. I don't want that, but hey, just telling you guys. And hopefully Donald doesn't have a rage attack and like start pissing on the Chinese right before they arrive on the 10th, right? We don't want that either. Just letting you guys know. But so far, so good. Looks fine. Looks fine. Now, this is a 1 hour chart. That means it's a swing chart. And at least from a technical perspective, this arrow means that if we break out over this major breakout zone, right, that we are retesting, we kissed the back end of it on Friday, then we are going to go higher towards the 29.92 level, which is a major resistance again. Why? Because that's where the market stalled, then came down, then went up. This is where the market stalled. This is where the market stalled. This is where the market stalled. That's 29.92, close to 3,000. So that's a major resistance. You're clear with me on that, Dominic, right?
Oh, yeah, I see it.
Okay. Now, I'm not really sold on the market totally because a lot of companies are hurting. So there could be some earnings warnings. What if somebody like a big one who is exposed to global trade, like even Boeing, to pick an example, comes out and says, you know what, earnings will be a little bit lower because of this trade tension, or FedEx, it's already got smashed, or some of these big ones who are really exposed to the global economy. So markets are going to drop. So I still am looking at the technical view of the market as a head and shoulder. What is a head and shoulder, Dominic? You covered that this morning. Is it bearish or bullish?
Depends which one it is, inverse or.
Very good answer. No, regular head and shoulder, not the inverse.
That's bearish.
Thank you very much. Great, man. So yes, so you look at the head here. One head, two head. Left shoulder, right shoulder, repeatedly. See that? So we are still, from a broader perspective, in a bearish head and shoulder pattern. What we are having right now is what? And I've said it probably about 60 times. What is this bounce called? It starts
Reflex.
with, yes. Yeah, I think A plus, man. I think you're getting your admissions letter from Harvard that you've been dreaming of for the last 90 years, you know? Yes, it's a reflex bounce. Thank you for, no, seriously, this is important because everyone else is going to hear it. Yes, it's a reflex rally. What does a reflex rally mean? That means Sir Isaac Newton's third law of motion. Every action has an equal and opposite reaction. So this is exactly what's happening. It does not change the overall trend on the market. Just so you know that. We are still in head and shoulder territory. and we are coming into a critical week, which is the first part of the week is all about Fed speakers, and the last 2 days of the week is about the major U.S.-China trade talks, which I think President Donald Trump will do a very strategic, practical arrangement, and I hope the Chinese do a practical, strategic arrangement. That's my wish and my hope and my prayers. So this is where we are. Okay, so that's your picture. Now let's zoom out a little bit more on the daily. Clean out this screen. And by the way, I put out the advanced coaching session I did free, which Dominic was there. Jen, one of our terrific, very passionate learners, a very new trader, was there. Serge, who's been with us for a few months now, was there. And they asked some unbelievable questions, guys. Simple stuff that even some of you who have been with us for maybe a year, 2 years don't still get it. So you talked about individual stocks too, like powerful stocks like Google and Netflix and things like that. So I suggest that you look at it in combination with doing tonight. So the key is we might be stalling a little bit ahead of the Jerome Powell stuff. Okay, so that's your daily chart. We pushed out we pushed out hard over the 50-day moving average. That's your red line here. We are finding resistance at this line here, which is the orange line, the 34-day moving average. So generally speaking, the way I look at past pattern symmetry. So this is what reminds me, this is the bullish version. Now let me ask you a question. Feel free to answer. When we have these type of ferocious rallies of major supports, and you look at the candle, what happens generally, like when you have that big rally? Is it like a completely straight line up? Each of the candles build on each other right from the top? No. Do you understand what I'm saying? The candle next day might be down. You might be down 70, 80, 100 points. The next day, the market opens down. And then, because you have to just look at the tail. This tail is not here. This was this is the start of a swing rally. But when the market opens up, like futures are down 1250, right? That means the markets are going to open down a little bit. You understand what I'm saying, Dominic?
I do, yeah.
You understand what I'm saying, Mike? Okay, don't worry about it, Mike. Can you hear me?
Yes.
Okay. Do you understand what I'm talking about, or do I need to explain it?
I understand what you're talking about.
Okay, thank you, sir. Just trying to get some feedback. So bottom line is it's not like you stair step on each candle, like, oh, huge candle, the next day it's going to start exactly there. No, it never, ever works like that. The next day it opens down, vacillates around, ends kind of in the red. The next day it opens down. See that tail? That's down. So this is what markets do. Then the next day, oh, it looks really good. So we're looking at the underlying internals, which is the stochastics, which are still trending higher. We're looking to see if the MACD is going to trend a little bit higher. So the next day, the markets open down a little bit and then just goes berserk. And then the following 3 days, the market kind of pulls back a bit and creates a flag. And then it goes berserk again. Then it creates a flag. That means red days. So the same thing is happening here. At this point, if you notice, we are down for about 13 S&P handles. This is where we closed at, ladies and gentlemen, on Friday. Where are we now? Right there. See that? Now, any of you who have taken the advanced coaching sessions and have listened to my webinars, there are multiple free resources on my Google YouTube channel. Just go on the new member intro videos. Believe me, if you just scour and go through some of them, you'll be up there. What a humongous 2 days. And this second day didn't start like right from the top. It started like it was down first, almost down to where where we had started this massive rally. But then it went up. So this is known as a bullish engulfing. What we call marching soldiers. What are marching soldiers? Candlestick pattern. These are marching soldiers. And now we are here. So let's say we are here down 14, and let's say the market opens there and ends there at 4 p.m. on Monday. Will that be a negative or a positive technical pattern? Let's say the market opens here down 14 handles. We're down 100 some points on the Dow, and then at 4 p.m. we went down 100 points on the Dow. Is that a positive or a negative pattern based on technical analysis and based on candlestick pattern? If we just close here on Monday afternoon,
Positive.
right? Because the body of this candle, right? The body of this candle is still, it's finding resistance here, but the body of this candle, of this humongous, beautiful, bullish engulfing candle on the second day, still encompasses and engulfs this minor pullback on the market on the third day. So it's still bullish. Exactly. Now, if this red candle expands down and goes below this level here, and it's blood red, that's a bearish engulfing candle. And we don't want that. But for now, it's fine. But you can hear the squawking of so many human traders on so many different platforms right now, saying, oh my God, futures are down 13, it's the end of the world. Look at the Chinese, they're evaluating some of their options. I mean, I put that article out there. All this garbage news coming out. China narrows scope for trade deal with US ahead of talks. Okay, thank you very much. They're flying 8,000 miles to basically tell the US to F off, right? No, I don't think so. I don't think so. They could meet on a remote island somewhere and have a fist fight. Why come to Washington, D.C.? So yeah, so they're fine. In the meantime, the internals are going to be back and forth. So yeah, we'll have a red open tomorrow. And from as options traders, we're going to look to see each of the charts and see whether we need to dollar cost average more, or just sit with our positions and see where we can buy more, or just sit with our positions and let it go. I'm not going to add any more money to it. Do you both understand that?
I do.
Exactly. So this is your longer term picture. And that's all I'm going to say tonight. We covered the economic picture. And the only thing that I'll show, because I do want to show, because I want to see it, is what is happening on the weekly. That's the bigger picture. So let's go. And these are all preset charts that I have drawn weeks ago. And I, of course, tweaked them a little bit. And this is your weekly chart. And the weekly chart is a little suspicious. We do have an uptrending internal full stochastic, what we call F stocks. But when you look at this here, there are two things that can happen. Stocks go reasonably well. This is still looking like a bull flag. However, if that bull flag breaks down substantially, it is no longer a bull flag. And with stocks that move with the market, we either have to exit our position, take the loss, or, well, that's it. Or we short. So this is still a bull flag. Does it break out this way? And so many important factors. Most important factor is Jerome Powell. Second most important factor is Hua, the Chinese trade negotiating team, on Thursday and Friday. The rest of the stuff doesn't matter. I'm not going to say forget all the garbage noise coming with all the financial media and stuff. Focus on the charts. That's all. And the third most important factor are big companies, brand name companies, issuing earnings warnings. If that happens, see you later for now. And that's the worrisome part, just so you know. So far, technically, this is where we are. The long tail on the weekly still active. But what we really want to hold in the zone here and start to move higher. We have all these channels and stuff drawn, but none of them will matter if we start to have a 500-point drop in the market again. Am I clear on that?
It is clear.
Yeah. So far, what I like is that this was the climactic drop, what we call the Christmas Eve massacre. It really was on the markets. It's never happened in American history where on Christmas Eve the markets closed down 600 plus points. But then what happened after Christmas Day? And then we took off right after Christmas Day. So that was a beautiful experience. Go listen to my video at that time. Did I say, oh, is that everything? It's all over? I said, no, we still have a little bit on the long side based on many different technical things that I was looking at. So anyway, remember one thing about human traders, retail emotional traders or human traders. We're all retail emotional traders. Some of us have less emotions. Some of us have a lot of emotions. You have a lot of emotion, go book yourself on the Oprah show. Okay? No, I'm dead serious. Or Dr. Phil. You want to be a tactical trader with more robotic emotions? Book yourself a seat at Crudesade Trading. I'm dead serious, guys. I don't care how successful you are in other careers and how tough you are and how tough you look. You know, the bottom line is trading and investing will make you change diapers so fast you won't even know what to do. The toughest guys in the world become complete wusses when it comes to being a trader or an investor. The toughest guy. So my question is, or toughest guy or gal, my question is, where do you want to be? A diaper changer or a tactical trader? That's all. So far, the red line is the mid Bollinger, not the 50-day moving average. Excuse me. This is the mid Bollinger, still holding that. So far, the Bollinger Bands are still telling us that the market is going to be volatile, certainly going to be volatile, but it's trending higher. I'm not saying new highs and all that stuff. I'm simply saying I'm going to measure the market based on what happens on a short-term basis till I see a little bit more clarity on the longer-term chart. So here I am seeing clarity, but not real confirmation. Okay, the internals are starting to kind of waver a little bit, and why? Rightfully so. Big China talks, Fed speak, all this political uncertainty that's going on in Washington D.C. Obviously. And to me, one of the biggest ones is are some big companies going to start issuing earning warnings, which they're obligated to do if they're going to miss earnings by a big way. The SEC mandates you let the investing public know beforehand that you're going to miss numbers. And that becomes a buying opportunity too, because when they come up with earnings, they might be a little bit better than their worst earnings warning, and then the market goes and stock goes higher. What I'm looking at and what you should be looking at is the daily. Most importantly, as a trader, you should be looking at the swing charts on the 1 hour. And this is the only chart, honestly speaking, you got to look at all week. Try to figure out if you're up to something, feeling really good, and it's all the way up here, you sell. Just the way as it's getting up here, and I show multiple versions of this, right? Take full or partial profits. Don't have to go nuts. Play with smaller amounts of money. This is going to be a very volatile, in my opinion, will end as a very positive week. And then as we get towards the middle of the month, after this week, then things really hit the fan. And I think we'll be down quite a bit at around the middle of October. Always has happened, I think will happen again. So all I have to say, thank you, God bless America. And like I always say, this country was built on grit and risk and intelligence. Well, practice those three things. Have a great evening, ladies and gentlemen. God bless you.